What's up, folks? Heine's Morning Update. February 27th. This will be this video today, and then I won't be doing one until Thursday morning. So we're going to try to kind of cover more macro of what I'm looking at. So today, 74 is your over-under. 73 is your overnight low. As long as that 74, 73 holds, I would say that we're probably in some bullish action. We did come down on Friday. We tapped the notorious 200 and bounced right back off. In fact, we hit the trend line and the 200 and bounced right back. So I would assume that we would start to come back up. You have a huge volume void here at 67. It's really 70 to 65. And then you have that volume void back up, and then you have back to 1.25 and your 41.55, which is your 2-year POC. So the 200's at 43 now, or excuse me, the 265 is at 43. So we'll watch that. Again, as I said in a past video, the 4,200, 3,900, like I think we can just trade sideways for a while. I think that, you know, we're coming down. We found a level. It came back up. And, you know, now we'll kind of gravitate towards this up towards 4,200. Maybe north of that, but that would be my guess. But watch that 260 for resistance today. And then I would use that 39.5 if 74 breaks as support. Now, if that goes down, we could see, you know, it could dump. But there's not much economic news. I think, again, my tendency is to think that we just kind of chop between these two levels until we find something else. The next few weeks, you know, we have end of month in a couple days. Those closings will be important. And then mid-March, March starts to ratchet up with volatility and some craziness on the cycles aspect that brings us into April. Right now, April 4th is a huge target, and mid-March is becoming a big target. Some are speculating into the first week of March 6th. So this might just kind of be the calm before the storm. So we've tested this. We've kind of tested the highs. We're going to hang out here until we get more information. I didn't load that weekly. Daily, or no, hourly, here's your 39.81 is your pivot, 40.16, 40.57, I like that, and then 40.91, 39.40, and 39.06, I really like S2. And then 64, again, I don't think that we see that today. So 73 low. That should hold. If not, your POC on the yearly ticked down from 69 to 67. Not that that makes too much of a difference. Your next target up would be 4,006 to 10. Then you got that 15 level, and then 25, and then you get into the 27 to 40 zone of resistance now. And then we'll get back up into that 75 area and then on back up. If we get follow through, if that's kind of where we're headed. That tap of the 50, that 200 was pretty intense. That was pretty important. So, I mean, we really came up right about here. This is when everybody was talking about all-time highs again, and, you know, bear market's over, and then they got crushed, and then now everyone's on the bear side, and, you know, so just stay agnostic. You know, we're up small, 1920 today. So just take your shots, wait for the stuff to come to you. See if that weekly loaded. So we're still well under that trend line. And then your macro 200 is down at 3,700. So again, we popped up, but we have not closed above that. So as of now, right now, I still tend to say that we lean bearish, but we're going to pop from where we're at. Euro, this needs to stay above this 407.8 basically, or 104.8. Otherwise, that opens the door to death. So we'll see if they start to defend that. You have a little update. We've dropped quite substantially from oh 04 or 10.4 to oh 05 half oh 05. That oh 05 level so far is held, but if they lose that and lose that oh 04 level or oh 04.8 really, that opens. So a close below that would send death knell for the euro. I don't know about that. Now, if that happens before the end of the month or closes the month below that, then I think that we're going to have some serious issues with that. And that would make me happy. I want this currency to die. Huge cash gap yesterday, 78 to 12. We have another one up here, 52 to 79 and 81 to 90. I wouldn't worry about this guy up here, 41.36, 41.47, but remember that one. So maybe now we hit, the lower levels, and now we start cleaning up all this stuff, right? So we've left damage, cash gaps, so theoretically we could go start cleaning this up before we start to move back down. That's typically what you'll see in a market, where you'll have a down or a big move, and then you'll retrace that move and start repairing all of this stuff. So that's what I would look at, as these cash gaps to start filling. You can also use those as a resistance. Weekly wise, not a whole lot. Durable, pending home sales, maybe. And then you got a Fed speaker. I think the Fed speakers and the rate stuff is, although we're talking about a half-point hike now after the chaos on Friday, so we'll see, how that comes. And if these guys start getting more hawkish, that's going to put more pressure on SPX and the euro. But I just, there's nothing really crazy coming out. There's no huge numbers. I think we got rid of those all last week. So stay vigilant. But I would look for, as long as these levels hold, I would look to start filling these upside gaps. And these would kind of be my targets for resistance. And then if we get above them, I'd look for support, but at least to start closing these gaps. Anyway, stay safe. I will be in and out of the room. And then again, new video on Thursday morning, but I'll update, as I see fit going through the day or the days. Anyway, stay safe, see profit, take it. Again, if there's no trade, don't take it. This market's been weird. The structure has definitely changed. We're not seeing the swings. I think the swings will come back mid-March through May. I think that will return. I don't think the volatility is gone in any way, shape, or form. So hold tight, but, trade accordingly for maybe not, trend days for the next week, and then look for those to accelerate where you have the larger swings kind of come back into mid-March through May. That's just my speculation. But anyway, trade the day and, just be safe. All right.